Let's get it. In today's show, I'll be breaking down the latest Bitcoin technical analysis, as well as the 3 reasons why Bitcoin is still due for further Bitcoin price upside. So don't get it twisted. And quoting Jim Cramer, checking in with Larry Williams, the major top in Bitcoin major. Now, when we inverse Cramer, that ultimately means BTFD with the ultimate buy signal. You already know. We'll also be discussing the latest with the spot Bitcoin ETFs being approved and launched and what to expect next. Also breaking news, Vanguard users threaten to close accounts after the firm blocked spot Bitcoin ETFs alongside Bank of America and Merrill Lynch. We'll also be discussing Grayscale court decision was the key to the Bitcoin ETF approval, according to the SEC chairman, Gary Gensler. And quoting Gary from a recent interview, he says Bitcoin is a highly speculative, volatile asset used for illicit activity. Max Keiser translated it for us. Gary is Bitcoin's biatch. He involuntarily approved ETFs because the Bitcoin mine virus destroyed his brain. Preach. Also, Cathie Wood of ARK Invest issues a bullish alert, says the ETF approval has raised the probability of Bitcoin skyrocketing to $1.5 million per Bitcoin. I'll be breaking down her timeline. We'll also be discussing Max Keiser's latest interview with Wired. He shares why crypto ideologues will not touch Bitcoin ETFs. Quoting him here, he says, the ETFs will have a mosquito effect carrying the mine virus for Bitcoin far and wide. He also says regarding confiscation that the government will seize all the Bitcoin ETF BTC for national security. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. If you're new to the channel, be sure to smash that subscribe button to receive daily premium crypto news alerts every single day, just like this. Also important to smash the like and hit the bell icon to turn on all notifications. It helps out tremendously with the stream, help get more eyeballs on the channel, helping with the YouTube algorithm. Greatly appreciate that. Today is pod episode number 1520. Let's go. Today is January 12th, 2024. And it just sounds so lovely just saying 2024, considering only 3 more months until the epic 2024 Bitcoin halving. Let's go. But anyways, let's kick it off with our market watch as we do each and every day. You can see Bitcoin is down 7% on the day, trading at roughly 43,700 at the time of this live stream, live and in the flesh. We got Ether only pulled back 1%, maintaining just under 2,600. We have Solana down 6%, trading at 95 bucks. We have AVAX down almost 9%. So extreme volatility as we were anticipating as the market continues correcting. And zooming out on the monthly, as you can see here, we still got Bitcoin up 5% on the month. And let's not forget, for the past year, Bitcoin is still up over 160%-ish. So don't forget that. Respect the pump. We also have Ether up almost 18%, BNB 18%, and Solana leading the pack up 39% on the monthly. And checking out coin market cap, we can see the market cap at 1.7 trillion with roughly 89 billion in volume for the past 24 hours. And Bitcoin dominance on the decline all the way back down to 50.1%, with the Ether dominance on the rise, clearly outpacing Bitcoin in the past 48 hours. ETH is now at 18.3% dominance. And 3 days ago, it touched the bottom at like 14.9. So it's up almost like 4 whole percent. That's pretty big. Now, checking out the top 100 crypto gainers of the past 24 hours, we got SAM token, FTT, up 19%, believe it or not, trading at $3.25, followed by Helium, up 15%, followed by Blur, followed by Su, Celestia, Ethereum name service, Optimism, and Litecoin. Now, which altcoins are you most bullish on for this bull run? Please do let me know, family, in the comments right down below. And checking out the crypto bubbles to get a visual perspective of the market. You can see HNT and FTT leading the pack. I would say roughly 92 out of the top 100 coins are correcting, bleeding, and in the red. And checking out the crypto greed and fear index, yesterday we were in extreme greed at a 76, the highest we have been in quite some time. But today we're back down to a 71 in greed. Last week was a 72, and last month a 65 in greed. So there you have it, my crypto fam. Let me know how many of you are taking advantage of this dip. Let me know. But anyways, let's now break down the latest Bitcoin technical analysis. Keep the comments a coming. pump the likes to pump the stream. We greatly appreciate that. This headline reads, 3 reasons why Bitcoin is still due for a further Bitcoin price upside. It's not all doom and gloom. So here's some bullish sentiment. Bitcoin briefly saw new 2023 highs this week, but ultimately failed to break out of the range. We did tap roughly 49,000. I was anticipating hitting 50, but 49 is the current top, just FYI. So here are the 3 factors on why you should be bullish right now. The Bitcoin price daily bull flag points higher as the US spot Bitcoin ETFs had their first day of trading. I think they did roughly 4.5 billion in volume, which broke all records for ETFs, by the way. In turn, it went up nearly 3,000 and then down even more. While initially promising, Bitcoin ultimately lacked the momentum needed to beat out the sell side pressure as it neared the 50G mark for the first time since December of 2021. That's right. So the new high is in at 49,000 for the past 22 months. But guess what? 2024 is just getting started. That said, with the January 11th daily candle close, Bitcoin did manage to preserve its bullish structure, according to popular trader and social media commentator Alan Terregrade. And he shared, noting that Bitcoin's now in a bull flag structure within an overall uptrend, which is a classic consolidation process, quoting him here alongside the chart. Latest candle keeps within the bull flag, waiting for breakout. Let me know if you agree or disagree with the analyst. And equally indicative of a classic bull market's early stages is Bitcoin's market cap dominance. As reported, Bitcoin was the first mover last year, now relinquishing its share of the crypto market cap to the major alts as the market cap just dropped back down close to 50%, as I mentioned earlier. And quoting this analyst here, trader, a nice head and shoulders pattern on Bitcoin's dominance has been spotted by Matthew Hyland for days. The chart comparison here explains to you how bearish the Bitcoin dominance and how bullish the Ethereum dominance are. Please note that both the horizontal support resistance zone on the Bitcoin dominance and descending, and ultimately just breaking down this chart, which we know the Ether dominance is on the rise after bottoming out at roughly 14.9% 3 days ago. Now, the next bullish factor, funding rates reset as open interest simmers, laying the foundations for sustainable Bitcoin price gains. Derivative markets remain neutral compared to the recent weeks. Data from CoinGlass shows that a broad reset has occurred on the funding rates across the exchanges despite Bitcoin's upside progress. The largest exchange, Binance, now had neutral funding on Bitcoin at the time of this article, in line with the OKX and Bybit exchanges. Meanwhile, the open interest, while elevated, is now below levels seen in early December when Bitcoin first entered its current trading range. Now, high levels of open interest have preceded several major flushes in the recent weeks, during which a snap price dip unwinds large numbers of positions. Analyzing the trend on ETF approval day, which was 2 days ago, then we had the launch officially yesterday, on-chain analytics firm Glassnode noted the increasing dominance of the CME group as a portion of the overall open interest. Quoting them here, this indicates a growing presence of institutional investors within the derivative space. Now for the third factor why you should be bullish on the king. Do not fear the Bitcoin supply squeeze. The notion that U.S. institutions now have carte blanche to engage in Bitcoin exposure has some wondering about the long-term supply impact. Now with its finite supply, not infinite, that's Ethereum. That's right. If you look on CoinMarketCap and you look at the max supply, it'll show you the infinity signal. With Bitcoin, we know we have a 21 million finite limited supply. Now, proponents predict that this will merely push the price up to the benefit of existing hodlers, and some are concerned about an increasing illiquid market. Quoting Daniel Roberts, the CEO and founder of Bitcoin miner Iris Energy, there is a major issue with Bitcoin ETFs, which few are acknowledging, he warned. Quoting him again, we have never had an ETF where the underlying asset has a limited supply. If ETFs buy the 30% of the available Bitcoin, or those hodlers also refuse to sell, then we have a major problem. Can you say supply shock? Now, responding, some of Bitcoin's household names, including Adam Back, the Blockstream CEO, were as unfazed as ever, which I'd expect nothing less from him. There is no problem, he shared. And someone else said, numbers go up. We know Bitcoin has number go up technology. Now, here's the ultimate buy signal, family. Jim Cramer tweeted January 12th, which is today at 10:14 a.m. Already almost 2 million views. Checking in with Larry Williams, the major top in Bitcoin, or major top in Bitcoin. Major. Ultimately, spreading FUD to convince the investors to sell and dump their Bitcoin bags. But we all know we inverse this mofo. So here's what I wrote. We just got our next major Bitcoin BTFD buy signal, fam. Salute. Hashtag inverse Kramer. So there you have it, family. Let me know your thoughts, and thank you, Mr. Kramer, for the buy signal. But anyways, let's dive into our next story of the day. We broke down the latest Bitcoin technical analysis. Now we want to discuss the launch of the ETF, which was officially yesterday. Let's check out how it's going and what's likely next after this launch. January 9th, the US SEC scrambled as it tried to recover from an erroneous tweet announcing the approval of the spot Bitcoin ETF. This left many members of the crypto community on pins and needles, and y'all remember how it went down. It was a fake out. Do you think that fake out was intelligently designed or just a mishap? Let me know your thoughts. And do you think their account was really compromised, or is he just Gary, that is, covering his own arse? Let me know. Now, new opportunities for retail investors. Professor of Law and Associate Dean at Vanderbilt Law School shared that the introduction of the spot Bitcoin ETF holds enormous significance for the crypto and financial markets. Quoting her here, most immediately, it'll provide a way for everyday mom and pop investors to safely gain exposure to Bitcoin. ETFs are a well-regulated, retail-friendly product. This should mean that via the spot Bitcoin ETF, crypto markets are likely to become a lot more accessible to investors who might otherwise have stayed well away from participating in a much less regulated crypto market. And this may be the case as the securities regulator approved 11 Bitcoin ETFs on January 10th, including 19 B4 apps from highly credible institutional players, the big guys, Grayscale, BlackRock, Fidelity, WisdomTree, Valkyrie, amongst others. Now, Leah Wall, CEO of Valkyrie, shared that Valkyrie's spot Bitcoin ETF will be available to U.S. investors through their brokerage or investment accounts. Any investor will be able to purchase shares of our ETF, which will be available for trading on the NASDAQ. Now, Wald added that Valkyrie is anticipating upwards of $400 million in assets to flow into the ETF during the first few weeks of trading. Quoting them here, we think we'll see billions in assets flow into the ETFs over the first month alone. Many investors have been waiting on the sidelines for products like this. And quoting the ETF analyst expert Balchunas, almost a good hour after this tweet, and the number still isn't 2.3 billion, but we ended the day at roughly 4.5 billion worth of inflows, family. And while it's too early to accurately predict the performance of the newly launched spot Bitcoin ETFs, we have Alex Tapscott, author and managing director of 9 Point Digital Asset Group. He shared there may be similarities between US spot Bitcoin ETFs and Canadian spot Bitcoin ETFs. For reference, Canada gave the green light for the first spot Bitcoin ETF back in 2021. And I think a month later, we hit our all-time high in November. And according to Tapscott, 9 Point Digital Asset Group launched the spot Bitcoin ETF in Canada back in May of 2021. He said that the Purpose Investments was the first fund to launch the spot Bitcoin ETF in the region, adding that the firm claims to have brought in over $1 billion in assets within the first month. Quoting him here, this is an important data point to consider because the US crypto market is 10 to 20 times bigger than the Canada market. He makes a good point. Yet while retail investors may benefit from the spot Bitcoin ETF in the US, some believe institutions may not be as enthusiastic. Canadian venture capitalists and everyone's least favorite shark on Shark Tank, Kevin O'Leary, aka Not So Mr. Wonderful, he shared, personally, I would never use an ETF. Why would I pay those fees? I mean, it's a ridiculous cost that is not needed, particularly with an asset that is a total commodity. In the case of Bitcoin, well, I must give him some kudos here. He actually said something for the first time I actually agree with. I say no to the Bitcoin ETFs if you have the opportunity to just self-custody the underlying asset, because we have to keep in mind that Bitcoin ETF is not equivalent to Bitcoin. Hopefully you understand the difference between the two, fam, because not your keys, not your coins. However, some experts beg to differ. Analyst James Seyfarth shared that the institutions might use the spot Bitcoin ETF. If they want Bitcoin exposure, the spot ETF will be their vehicle of choice, but this may take some time before that happens. Now, will a spot Ether ETF be next? Let's discuss it. In addition to retail adoption, predictions around the eventual approval of an Ether ETF are also in circulation. Tapscott noted that the spot Ether ETFs were approved shortly after the spot Bitcoin ETFs in Canada. Quoting him here, after Canadian regulators approved the spot Bitcoin ETFs, there was not a good reason for them not to approve spot Ether ETFs. Keep in mind, though, that the market for Ether is smaller than Bitcoin, and as a result, there will likely be a meaningful demand and significant impact on the price of Ethereum. Now, greater acceptance of blockchain tech. He also said that blockchain tech will likely gain wider acceptance amid the buzz Bitcoin ETF approval, which has created around the price of Bitcoin. Quoting him again, everyone interested and involved in the crypto market will become educated about the blockchain tech. This will serve as an awakening for most people around the potential for digital assets and blockchain to transform finance and other industries. And echoing this, we had Kurt Hemmecker, CEO of the Mina Foundation, the nonprofit organization supporting the Mina protocol. He shared that he believes this event creates new opportunities that people may not immediately identify. For example, he noted that the spot Bitcoin ETF approval could potentially result in a major boom for zero-knowledge focused projects. Quoting him here, bringing added legitimacy in the eyes of the mainstream players. The approval may lead to not just an influx of investments, but also increased adoption. Zero-knowledge blockchains distinguished by their ability to enable enhanced levels of control over data, and in other words, data sovereignty, will stand out to this growing segment of the market that values data sovereignty and security highly. Now, the challenges to consider, although many positive aspects may be associated with the newly approved spot Bitcoin ETFs here in the US, there may also be some downsides. For instance, Boring explained that the counterparty risk will likely increase. Investing in a spot Bitcoin ETF introduces counterparty risk. Investors rely on the ETF issuer to accurately track the performance of the underlying asset. If the issuer encounters financial difficulties or mismanages the fund, it could impact the ETF's value and the investor's return. Also, as we're going to be covering later on in the show, there's a counterparty risk of confiscation. Government is notorious for confiscating your wealth, so we'll be discussing that a little later. Boring added that the market price versus the net asset value of Bitcoin may be impacted. Quoting him again, ETF shares are traded on public exchanges, and their market price can deviate from the fund's net asset value. The price dislocation could introduce arbitrage opportunities, but may also lead to unexpected trading costs for investors. Now, all the ETFs have different fees. The largest we know right now is with Grayscale at 1.5%, and I think it's ARK 21 shares, like roughly 0.2% or 0.19%. And there's another one lower than 0.25%. So we also have what's called game theory in full effect as all these asset managers are competing to gain market share in their ETFs. And also we have the ETF commercial wars going on. It seems every day there is a new ad being released, which is just going to hype up Bitcoin even more. So you already know. What up, Todd Ferris? Shout out Todd. He just gifted 5 MicroStrategy memberships to the channel. Fredo, New York City. Tennessee Ecoman, Texas Champ. That Callis Addison and Volted Mark, you've all been blessed with a membership, so please do show Todd Ferris some love. What makes our community and channel so incredible is you guys. We have the most giving, active community, and I'm feeling blessed. We just launched memberships roughly 30 days ago. We already have close to 600 members, and I would guess over 400 of them have been gifted everyday gifts, and I love it. So keep it coming. Much respect, family. But anyways, fam, we still got a lot to cover. So let's dive into our next story of the day and discuss these mofos over at Vanguard who don't want no part of Bitcoin ETFs. They will not allow their clients or customers to touch it. Why is that? Let's break it down, family. This is the old money. This is the oligarchs. You know what I mean? The second largest asset manager in the world. Let's break it down. Asset manager Vanguard's apparent decision not to allow the purchase of spot Bitcoin ETFs on its platform has seemingly pushed a few customers towards the exit door. That's right. If you're in there, I would exit as well. You know what I mean? According to a January 11th report for the Wall Street Journal, Vanguard said it won't offer the new spot Bitcoin ETFs on its brokerage platform. And I can't confirm this. I'm thinking off of my collective memory here, but I think one time someone from Vanguard reached out to me and told me not to mention their name alongside Bitcoin. And I've never received a random email like that from any asset management group before. And it left me boggled because all I was doing was quoting a Michael Saylor quote, and Michael Saylor was saying something like, all the asset managers, BlackRock, Fidelity, Vanguard, are going to be launching ETFs. And now that I think about it, they reached out to me and said, this is false information. We don't support Bitcoin. We don't want you mentioning our name on your podcast. So F you guys. I mean, serious? And for real, for real. And now it all makes sense. They're anti-Bitcoin. These are the old money oligarchs and gatekeepers of the financial system. Now it all makes sense. Anyways, spotting them here. Spot Bitcoin ETFs will not be available for purchase on the Vanguard platform, said the company in a statement to the Wall Street Journal. We also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products. Our perspective is that these products do not align with our offer focused on asset classes such as equities, bonds, and cash, which Vanguard views as a building block of a well-balanced long-term investment portfolio. Vanguard wasn't amongst the 14 issuers to apply for the spot Bitcoin ETF in 2023. Some investors have seen its recent moves as a reason to move their funds to other platforms. Good for them. I say boycott them because they don't support the hardest money not to be F with. You want freedom and sovereignty, you want Bitcoin. If you want slavery, keep by all means in the financial legacy system, which would be Vanguard. Now, one apparent Vanguard customer, Tony Spencer, claims a spokesperson told him that Vanguard isn't allowing spot Bitcoin ETFs for purchase because the product doesn't fit with Vanguard's investment philosophy, which ultimately means freedom and sovereignty is not in our moral. It's not a part of our moral code. We prefer tyranny, is what they're ultimately saying. Spencer also claims Vanguard only allows investors to sell the Grayscale flagship Bitcoin product, the Grayscale Bitcoin Trust. So you can only sell it, you can't buy it, which was recently converted into the spot ETF. And quoting Eleanor Terrett, new Vanguard Group, the world's second largest asset manager behind BlackRock, is reportedly blocking customers from buying into the new Bitcoin spot ETFs, saying the products don't fit with Vanguard's investment philosophy. So yeah, now we know what's up. Coinbase senior engineer and manager Yuga Kohler was amongst others who said he'll be converting his Roth 401k savings at Vanguard to Fidelity. Good for him, which issued one of the 10 spot Bitcoin ETFs that launch on January 11th. Why support your oppressors is the million-dollar question of the day. And that goes for the banking cartels as well, like Jamie Dimon's JP Morgan Chase. They don't support Bitcoin. They FUD Bitcoin. They do everything in their power to try to destroy it, which we know, thank God, it can't be destroyed. But why support them? I say borrow as much money from their corrupt banking cartels as possible and buy Bitcoin and launch a speculative attack, just like Saylor did. Now, Vanguard's paternalistic blocking of Bitcoin ETFs does not fit in with my investment philosophy, they added. Bitcoin commentators Neil Jacobs said he is also in the process of transferring funds out of Vanguard in response to the reported decision, quoting him here, terrible business decision by Vanguard. Let me know your thoughts on that, family. Now, customers of investment firm Citi, Merrill Lynch, Edward Jones, and UBS reported they're also unable to purchase spot Bitcoin ETFs on those respective platforms, according to the Wall Street Journal. Now, USB is considering unsolicited offers from prospective spot Bitcoin ETF investors and is making assessments on a case-to-case basis. It is also understood that some of the 10 approved spot Bitcoin ETFs on the platform, but not all. Meanwhile, a Citi spokesperson said that a spot Bitcoin ETF is already available for its institutional client base, and the firm is evaluating the products for its individual wealth clients. Now, Merrill Lynch is reportedly wanting to see whether the spot Bitcoin ETFs trade efficiently before deciding to offer the purchase of Bitcoin products, is what they told Fox Business. Meanwhile, spot Bitcoin ETF trading was accessible on JP Morgan's brokerage firm, JP Morgan, and an authorized participant of the BlackRock iShares Bitcoin Trust ETF. However, the Jamie Dimon, aka Jamie Dimon-led bank, has shared a risk disclosure to prospective investors considering placing a trade order, according to screenshots shared by Dan McArdle, co-founder of blockchain intelligence platform Masari. And quoting Balchunas, Bitcoin ETFs are like rap albums in the late 80s. Vanguard won't even carry them. And here, JP Morgan slapping a parental advisory label on iBit. And quoting Dan McArdle, JP Morgan interface throwing this warning when you try to buy BlackRock's iBit Bitcoin ETF. We get it. JP Morgan, the boss, hates Bitcoin for political reasons, but you are also named as an authorized participant in BlackRock's offering. So just accept your fate already. Such hypocrisy, isn't it? The first day of trading came January 10th after the long-awaited approval. Spot ETF trading volume top $4.5 billion, as I mentioned a little earlier. So there you have it, family. What do you think about BlackRock, Bank of America, and all these juggernauts ultimately not allowing customers to touch these Bitcoin ETFs, even though you can get them everywhere else? Do you think they'll eventually go out of business? Do you think eventually they'll capitulate? Let me know your thoughts. We still got a lot to cover, so let's dive into our next story of the day and discuss the latest Gary Gensler Bitcoin FUD making the rounds right now. We'll start here with this tweet. Watcher Guru shared this just in. Gary Gensler says Bitcoin is a highly speculative, volatile asset used for illicit activity. So even after approving the spot Bitcoin ETFs, they're still fudding it. So it just goes to show you how threatened these mofos truly are about Bitcoin. Now, Max translated this for us. Thank you, Max. Gary is Bitcoin's biatch. He involuntarily approved ETFs because the Bitcoin mine virus destroyed his brain. Preach, Max. That's why I love Max so much. Anyways, Gensler, chairman of the SEC, acknowledged on January 12th that Grayscale's court victory was crucial in approving spot Bitcoin ETFs, which we all know, breaking news all over the mainstream. And although the SEC has denied several apps for a similar product since 2013, Gensler said during an interview with CNBC's Squawk Box that the court decision in favor of asset manager Grayscale in August of last year changed the SEC's perspective over the crypto investment vehicle. That's why we got to give credit to Grayscale, because if it wasn't for them and their lawsuit versus the SEC, we wouldn't have a spot ETF today. Now, quoting chairman of the SEC, Gary Gensler.
We have disapproved a number of these applications for a spot Bitcoin ETF over the years, and something had changed. I'm a deep believer in the rule of law and respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
There's the FUD directly from the worm himself. And despite the go-ahead, Gensler reiterated that the approval was not an endorsement of Bitcoin. Quoting him here.
We do not endorse Bitcoin.
And we don't endorse Gary Gensler. I sure as hell don't endorse this mofo. If you'd like to see Gary replaced and fired, put a big fat 1 in the live chat, family. Let's see. Now, in June of 2022, the SEC denied Grayscale's app for the conversion of its Grayscale Bitcoin Trust, GBTC, into the spot Bitcoin ETF on the grounds that the product was not designed to prevent fraudulent and manipulative acts and practices. In response, Grayscale filed a petition for review with the US Court of Appeals for the District of Columbia Circuit. The petition resulted in a significant victory for Grayscale August 29th of last year, when the court ruled in favor of Grayscale, ordering that the SEC's legal ground for denying was insufficient and that the case should return to the commission for review. The legal battle proved that the worthwhile, or being very worthwhile for the entire industry, not just Grayscale, the SEC gave its blessing to 10 ETF holdings of Bitcoin as their underlying assets as of January 10th. The inaugural trading session was marked by significant activity, with Grayscale's GBTC accounting for $2.3 billion in trading volume, almost half of the overall $4.5 billion volume on the day, according to data from Yahoo Finance. Meanwhile, BlackRock's iShare Bitcoin Trust ranked second with a trading volume of roughly $1 billion. And also speaking with CNBC's Squawk Box program, BlackRock CEO Larry Fink said he is a believer in cryptocurrency as an asset class, not a currency. So there you have it. Let me know if you agree with Max. Is Gary Gary is Bitcoin's biatch, and he involuntarily approved the ETFs because his Bitcoin mine virus destroyed his brain, ultimately saying in so many words that he didn't have any choice but to approve it because not approving the Bitcoin ETF would have been too criminal, and Gary don't want to go to prison. So let me know your thoughts. Keep pumping the likes, pumping the stream. Let's get to our next story of the day and discuss this $1.5 million price prediction from Cathie Wood. She was recently making the rounds, and she says with the launch of these ETFs, she is more optimistic that Bitcoin will hit her target of $1.5 million per coin. Here's the timeline. Here's the latest, and then we'll be discussing the latest interview from Max Keiser. He was just interviewed by Wired magazine. We'll be discussing Bitcoin confiscation and why these Bitcoin ETFs are not safe. So here we go. Let's first knock it out with everyone's favorite, Cathie Wood. Here you go. ARK Invest founder Cathie Wood says the massive price target for Bitcoin just became more likely with the approval of the spot Bitcoin ETFs. In a new interview on CNBC, Wood says that ARK Invest's bull case prediction of Bitcoin reaching 1.5 mil by 2030 is now more probable after the US SEC approved on Wednesdays their 11 spot Bitcoin ETFs. So thank you, Gary. We know you didn't want to approve it, but you were forced to. Otherwise, it'd look criminal. So kudos. Anyways, Cathie says our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is 1.5 million by 2030. You can see the price forecast building blocks on ARK Invest's website. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical, rules-based monetary system in history. It is a very big idea. Kudos to that. Now, as you can see here, this is published from ARK Invest, Cathie Wood's company. Bitcoin is likely to scale into a multi-trillion-dollar asset. ARK's research estimates the price of one Bitcoin will exceed 1 million by 2030. Here are the three targets outlined for you. We got the bear case, which would be 258,000. We have the base case, which is actually closer to 700,000, 282,000. And then we have the bull case, which is close to 1.5 million, 1.48 million to be exactly. Now, ARK Invest was one of the 11 spot Bitcoin ETF apps that the SEC had approved. The others include BlackRock, Fidelity, Grayscale, VanEck, Bitwise, Franklin, Valkyrie, Hashdex, WisdomTree, and Invesco Galaxy. The spot Bitcoin ETFs create a monetary pipeline between Wall Street and Bitcoin by market cap. And to watch this interview she did in its entirety, check the show notes below the video in the description. So there you have it. What are your thoughts on her three case scenarios for 2030? Do you think we get the base case, the bear case, or the bull case? I'm going to go with the bull case because this is the most bullish channel in Bitcoin on the tube. Just saying, and for good reason. But anyways, family, now for our feature story of the day. Here's the latest with Bitcoin. Wired Magazine actually just recently interviewed Max Keiser, and Max discusses why we won't touch these Bitcoin ETFs. Any Bitcoin purists won't touch these Bitcoin ETFs. He also says that the government will seize all Bitcoin, ETF Bitcoin in the name of national security. So you have been warned. Here we go. Here's the latest from Max Keiser, as he tweeted here. The ETFs will have a mosquito effect, carrying the mind virus of Bitcoin far and wide. He also tweeted here, number one, the government seizes the ETF for national security. Number two, before they send you your USD. Number three, price moves up $100,000. Number four, you pay tax on the gain from the payout. And with what's left, you buy Bitcoin at the price of $100,000 per coin. Higher. Number five, the price crashes. And number six, you're now sitting in a net losing position from where you started. That's right. He says you are not protected against government seizure, and the US government plans to seize all the Bitcoin ETF Bitcoin in the interest of national security. Let me know if you agree or disagree with that sentiment. Now, here's word for word transcribed for the interview he did with Wired Magazine. I want to read this to you because it is very insightful, and shout out to the high priest. Here's the interview, word for word, what he had to share. A lot of good questions asked, so shout out to Wired Magazine. So here you go. Let me just get right into the questions asked. So Max says, hi, Joel, sure, I'm doing this on my phone, yada, yada, yada. A quote of mine you see pop up on social media, you don't change Bitcoin, Bitcoin changes you. Preach. Keeping this in mind regarding your questions. Number one, the mosquito effect. TradeFi is carrying the mind virus of Bitcoin far and wide, and this is the first time ever retail investors have front run Wall Street. So congratulations to all my Bitcoin hodlers that front ran Wall Street. Well done. Like Richard Dawkins, the selfish gene theory, the DNA, or basic unit of one Satoshi of Bitcoin, is working its way in the body and mind of our human economy and society with only one objective: eliminated the threat of fiat money and central banks. In other words, BlackRock is doing the work Bitcoin wants them to do. They are drones in this equation. Number 2, Bitcoin is proof of work, not proof of stake. So the incentive model is different than fiat money or altcoins or even gold. A concentration of Bitcoin gives the owner no ability to change Bitcoin. With fiat money, the more you have, the more ability and influence you have to change the laws in your favor. In light of this, concentration of Bitcoin poses no threat to Bitcoin whatsoever. Number 3, this gets back to the question. Game theory is playing out exactly as observers of Bitcoin have been predicting since inception. The ETFs are drones doing Satoshi's work. They are motivated by greed, but Bitcoin alchemically transforms greed into altruism via the Nakamoto consensus model, and we all benefit. Shout out to my Bitcoin alchemists out there, family. You know what I'm saying? Number 4, on the contrary, Bitcoin's ideological model is transforming the world. I see it happening firsthand in El Salvador, where we advise the President Bukele on the Bitcoin policy. That's right, Keiser is Bukele's right-hand man and senior Bitcoin advisor. The transformation going on here is remarkable. El Salvador has become the new shining city on the hill. The new Statue of Liberty is the volcano in El Salvador. Now, they asked him a couple of follow-ups to clarify, do you think the ETFs are a helpful vehicle for spreading Bitcoin further afield and that the upside is worth enough to offset the counterparty and seizure risks incurred by these new Bitcoin investors via the ETFs? So listen up. This is in regards to the seizure and confiscation of the Bitcoin ETF. Max responded, the seizure risk doesn't impact Bitcoin. It only impacts those foolish enough to ignore these risks. It doesn't concentrate power and influence because the underlying incentive model rejects centralization of all types. Bitcoin's path is unstoppable. It is designed as a fiat money and central bank killer. That's right. This is highly disruptive, and we'll see the global financial landscape change dramatically with many unexpected winners and losers. And with respect to the objective of eliminating the threat of fiat and central banks, are you not concerned that the ETFs will line the pockets of the kind of old school financial institutions emblematic of the fiat system? And continuing, the beauty of Bitcoin is that lining the pockets of bankers with fiat money whose purchasing power goes to zero against Bitcoin is beautifully aligned with the greater good. Lining these bankers' pockets with Bitcoin has no impact on Bitcoin or any negative impact on society at large because Bitcoin is not proof of stake. That is, having lots of Bitcoin does not give anyone more power over the network. Now, you don't change Bitcoin, Bitcoin changes you. We are witnessing, thanks to Bitcoin, the failure of the 300-year experiment with central banks and fiat money. If you want to see where this goes, look to El Salvador. That has replaced the US as the moral and human rights standard bearer of the world. So there you have it, my crypto fam, coming directly from the high priest, Max Keiser. Let me know if you agree or disagree with his sentiment that they will seize the Bitcoin through the ETF. And speaking of that, I'm actually going to share a bonus tweet with you. This was just January 11th. Ali Bradley shared, breaking, the state of Texas has seized all city property along the riverfront at the border of the Eagle Pass area under governor's emergency powers. It's called eminent domain. I know that. I used to be a real estate appraiser. That means the government has the power to seize your real estate for the best interest of the state or the government. And it happens all the freaking time, including federal processing locations and equipment. This is according to multiple sources. All access to the property is limited to state authority only. Border Patrol will be permitted to enter the property to remove their equipment and supplies. Agents will not have access to the area unless there is medical emergency. I am told that the state plans to start arresting all who cross for criminal trespass. This is not under new illegal entry law, SB4. They have been arresting for criminal trespass for months. And here's the official statement. Texas is holding the line at our southern border with miles of additional razor wire and anti-climb barriers to deter the record high levels of illegal immigration invited by President Biden's reckless open border policies. It's all by design, family. Alex Jones has been blowing the whistle on this. Make sure you're following him because child trafficking is a real deal and the government perpetuates it. Yes, I said it. The Biden administration allows unfettered access for Mexican cartels to smuggle people into our country. This is fact. Texas will continue to deploy Texas National Guard soldiers, yada, yada, yada. So here's what Max wrote in response to this tweet. And you don't think the government will seize Bitcoin held in Bitcoin ETFs? Brother, please. Broski, please. What do you think regarding all of this? Let me know, crypto fam, and I'll read your comments out loud. And I greatly appreciate everyone's support. Pump the likes, pump the stream, and let's freaking go.